Welcome to the SRAX Investor Conference, March 2023. I appreciate you joining us today. There's still a few people that are joining, but we're going to go ahead and get started. First off, my name is Chris Miglino. I'm the CEO and founder of SRAX. Thank you for joining us today. And I think that it's very important that today you focus on this safe harbor statement that we have, so that please give it a read as we start to get the conference started. So I want to start today by offering my apologies for the recent events that led to our company be delisted from NASDAQ. We understand that this has caused significant concern and disappointment among our shareholders, and obviously we take full responsibility for this situation, as we should. We want to let you know that we're taking decisive actions to address the situation. We've hired a new CFO who will be revamping our financial infrastructure, and we're committed to doing everything in our power to get our financials back on track as quickly as possible. In addition, as we have been for the last quarter or so, we're focusing on cash flow, SaaS metrics, gross margins, and profitability. We have to be able to stand on our own 2 feet during this period. We understand that we have a lot of work to do to regain your trust, and we're committed to being transparent and proactive in our communication with you as we move forward. We know that this is a challenging time for our investors, and we appreciate your patience and continued support as we work to turning things around. So let me give you a little bit of an overview of what we're going to talk about today. We're going to talk a little bit about what led to the issue. We're going to talk about what we're doing to fix our accounting issue right now. We're going to do an overview of the DNA transaction because we haven't spoken with the investors since we did the DNA transaction. We're going to talk about an overview of the LD Micro transaction, and then we're going to talk about the current state of the business, and then we'll open it up for Q&A after that. So as many of you know, because you've seen the filings and the 8Ks, the NASDAQ had given us until February 28th to get all of our filings done. They had asked us to get our first filing done by December 31st, which we did. They asked us to get the second one done mid-February or the latter part of January, and then the last one done by February 28th. We had sent NASDAQ a letter telling them that we would not be meeting those dates and that we needed a little bit more time. And we had thought that they were going to allow us some additional time, but on the evening of March 7th, we received an email telling us that on the morning of March 9th, we'd be delisted from NASDAQ, and that we would be moving from NASDAQ to the OTC. When we moved to the OTC, we've now moved down to the expert market. Since our filings are delayed, as they were with the SEC prior to being delisted from NASDAQ, you can't even be added to QX or OTCQB. You fall into the OTC expert market, which is a little bit of a unique space because it has limited ability to buy, and only experts out there can actually make purchases on the expert markets. And that's why you've seen not a lot of purchasing, and many of you have emailed asking, how do we make purchases on the expert market? And we're trying to get the answer for that for you now. There is on the expert market, there is a service that we can subscribe to through the OTC that'll give us the information of the people that are actually trading there. That should be up and running in the next few days here. So we'll let you know once we know where you will be able to look for market makers and people that are participating in the stock. But aside from all of the technical dates and things, really what, got in our way here was, I don't think we had the right infrastructure in place on the accounting side. We needed more robust team to help us on the accounting side. I think we were missing some core elements that enabled us to get things done in a timely fashion. And I don't think we moved fast enough on making the necessary changes in that area to enhance it, build it. We also tried to run the business as lean as possible, and I think that all that collectively was just a mistake for us. So, hopefully now we can resolve these accounting issues by bringing in a new CFO. The new CFO has been working closely with the team for around the last six weeks. As our accounting is somewhat complex with our marketable securities and things of the sort, we wanted to make sure that he had a basic understanding of the business, and it was something that first he'd come in as a consultant and understand and see where we could use some help. And it turns out that he could actually become the CFO of the business. So we think that this collaboration between the new CFO and us will help us expedite things and get all the necessary things in place that will help, get our accounting in order. So our new CFO is Alan Urban. You're going to meet Alan in a minute, but Alan has around 30 years of experience in corporate finance. So he was previously the CFO of a few small cap companies, so he understands the small cap world. And the first being RSSS, or Research Solutions. The next being Reach Local, RLOC. Those are a couple that he was the CFO of, and some of you may have traded those stocks or heard about them at some of the conferences. So he has a good background. We've gotten to spend some time together. We live very close to each other as well. So our ability to communicate and spend time together as we go through this transition is going to be there. So what I'll do now is I'll turn the call over to Alan. He can tell you a little bit more about himself and what his thoughts are. Alan?
Hi, Chris. Thanks so much. Thanks to you and to the entire SRAX team for your warm welcome. I really appreciate it. I'm excited to be here, and I look forward to the road ahead of us. I believe my significant past experience fits the profile of what SRAX needs at this very moment. Basically, a microcap, SaaS-focused CFO to bring structure and leadership to our finance and accounting function so that we can not only get current on our SEC filings, but build the people, system, and processes to ensure we never become delinquent again, and have accurate and timely financial information so that we can better manage the company. While I might be joining at an unfortunate point in the company's history, I believe that at our core, the Sequire platform provides great value to customers and is a solid foundation for future growth. Let me briefly touch upon my priorities. Chris, if you don't mind advancing to the next slide. And these are in no real order, as they are all critical and they will all be started immediately. That being said, results here will not be measured in days or weeks, but in months or quarters. We must get current on our SEC filings, but for that to happen and be sustainable, we must build out our accounting and finance department, staff, systems, and processes, which are currently not what you would typically see in a similar size and profile public company. This build out will also ensure management has the infrastructure to get information they need in a timely manner to make informed business decisions, which is critical. We must focus on our SaaS metrics, margins, and profitability. This data is critical in order for us to understand and run the business and to compare ourselves to existing benchmarks. The build out will also ensure we have real-time access to this data, which is what is expected. We must also focus on cash flow, which means understanding our margins and profitability and getting our operations right-sized so that we are cash flow break even or better each month. And the company has already taken action on this front, which is really good to see. And in the end, we must be able to stand on our own 2 feet from a cash perspective. Luckily, we have no exposure to the recent bank closures as reported in the news, but there definitely is uncertainty and some potential risk out there. We'll stay aware of that. And finally, as we put so much time and effort into the items above, we also have to keep an eye out and an eye on value creation planning for the future. I believe that product is the keystone here, and the Sequire platform, which already provides great value to customers, provides a rock solid foundation for future enhancement and growth. And to be blunt, our product has to be a must-have for our customers. So again, I would like to thank Chris and the entire SRAX team for their warm welcome. I look forward to working with all of you. Chris, back to you.
Thanks, Alan. Welcome to the team. We appreciate it, and we're looking forward to having you, help us on this front. So thank you very much. There's a couple of, in addition to the delisting, which obviously is the biggest news, we also have a couple of things that we want to talk about and also, cover our liquidity as well at the end. But we want to talk about the DNA transaction because we haven't had the opportunity to do that with everybody on the phone. So DNA is a company that we've known for a long time. It's generated for the partners of the company around $50 million over the last 5 years. We've known DNA since 2018 approximately. And, we've been collaborating with them on a few different things. But we went to DNA about the idea of helping us build out a piece of the Sequire platform that is for private companies and not for public companies only. So we wanted to understand how to build out a cap table management system and a piece of the software that would allow for public companies to utilize private companies utilize our platform same way that public companies do. And DNA has that experience, the same way that LD Micro had the experience that was necessary to help us understand how to build the virtual events platform. DNA has the experience to help us understand what it needs to build out the private piece of the Sequire platform. Now, one thing that's important to understand is the entire DNA organization is remote and works on commission. So there's no fixed overhead cost that's coming back from the business. Everybody's working on commission inside the organization. So we're now taking these approximately 15 independent contractors and moving them over to becoming salespeople for Sequire and allowing them to sell both private and public companies for Sequire. This is providing us with additional exposure in the marketplace, with more people out there helping us sell at a reduced cost, something that isn't costing us money except for what people are actually closing on. So over the next few quarters and over the next year, you'll start to see these products, and you'll see us learn about what it takes for private companies to be on the Sequire platform. So what did the deal with DNA look like? Because a lot of people have asked questions about that and seem to be a little bit confused about it. Instead of buying the business, we bought the assets, since there was everybody in the organization was remote. So we bought the assets of the company, that around $3.6 million worth of assets within the organization. That was comprised of $1 million in cash, around $400,000 in crypto, which we sold relatively quickly, and around $1.6 million in other private company investments. In exchange for that, we gave 1.3 million shares of SRAX stock, which at the time, seemed like probably a good deal. Now, Obviously, that's worth a lot less money today than it was. They also have the ability to get another 3 million shares after a shareholder vote. Now, the reason this deal requires a shareholder vote is that one of our board of directors was one of the partners in this business. And while he wasn't involved in any of the negotiations, the rules still require that we have a NASDAQ or that we have a shareholder vote out there. Now, in addition, they also have the ability to invest an additional $2 million in the company. But that is, unless the stock gets back up above $1.50 or so in short order, that's highly unlikely to happen. But we think that this deal is, good for the company. We think that the partners at DNA have had amazing contacts and connections that we're going to be able to leverage over the years. They've already helped us with our event down in Puerto Rico, which I'll talk to you more about in a little bit. But I think that their knowledge on private company engagement is going to be key as we move forward. So the next thing that we want to talk about is the LD Micro transaction that we recently did. So we bought LD Micro a few years ago in order to establish relationships with all of the small cap companies that were attending the LD Micro event and to have our name out there. And when we were approached by Freedom Holdings, which is the company that recently also purchased Maxim, they purchased Maxim, I think, for approximately $400 million. They also wanted to own a conference. So they approached us about the possibility of selling LD Micro to them. And we were able to come to terms on that. Not only did we get $8.3 million worth of value, that's broken down into two payments of $4 million, which we received, another $4.3 million in Freedom Holdings stock. And obviously we can hold that for the 144 holding period, which is 6 months, around 5.5 months from now. Or if we have piggyback registration rights. So if they register the shares sooner, then we'll be able to sell those shares sooner. But the most important part of the transaction is we didn't want to give up the things that were important for us in the transaction. So we retained the right and the ability to own the exclusive rights to streaming the event. So for the next 4 years, we'll be streaming the LD Micro event. We'll also be the exclusive market intelligence platform at the event and the exclusive digital advertising company at the event. And we'll be the exclusive company that's doing filming of interviews like we've done in the past for our spotlights at the event. And we were able to, define around 40 or so companies that we knew were competitive for us and specifically call them out as not being able to, attend the event and participate. So it's not only did we get the money, but we got the ability to continue to have the exposure that we have at the event. And I think that Freedom will provide LD the kind of growth that they're looking for in the business. So what does the business look like today? So we received around $4 million in cash from the LD transaction. We currently have approximately $2 million was used for liabilities and things we owed money for. We paid back around $400,000 to reduce debt. And part of ATW's releasing their collateral of LD Micro, we agreed to make some payments back to them out of the money that we received. And approximately $2 million remains in our accounts. So we're focused now on cash flow, our SaaS metrics, the gross margins. So we're really focused on being able to stand on our own as a business. Around 3 months ago, the executive management team came together to make some decisions about how to operate the business on a cash flow basis. We took the average amount of stock that we were receiving from sales of our portfolio over the last 4 months, and added that to what we know is the cash receipts on a monthly basis, and we right-sized the operation to run against that liquidity. So that is where we are today, and we continue to make improvements and enhancements there. So if that gets out of whack at all, if we see a decline in revenue or decline in cash flow coming in, we'll make the necessary adjustments on the expense side. But just to give you an idea, in March of this year, so this month, we should generate close to $500,000 in sales from our marketable securities. More now than ever, we're starting to see significant positions being sold out in the marketplace. So many different positions that we have, but selling a little bit of all of them every single day is generating a good amount of cash for us. Another thing that we've been doing is, since the beginning of the year, we've really been focused on doing cash-only transactions. So our goal is to be at a point where, if you look back at this company in 2 years from now, we'd like to be fully SaaS-based business that is charging credit cards and an occasional invoice to companies for our SaaS platform. And we want to build up against those features that are on the SaaS platform that will allow for our customers to continue to want to, engage with us. We think that taking the stock, and we may do that for some legacy customers that are, NASDAQ based, that trade a lot, but doing it for smaller companies, just while it's generated some, cash flow over years, it's tough on the cash flow going forward. You have to wait for those positions to unlock. It takes sometimes, 6 months to 2 years for those positions to unlock. There's, right now you're seeing some stuff of deals that we did 2 years ago that we're just able to start selling now. I think that's why you'll start to see an acceleration in the amount of stock that we're selling from our marketable securities, because a lot of that is we've held for so long right now. In addition, we have around, another 5.5 months, we're going to get another $4.3 million in Freedom Holdings stock. So, from the sale of LD. So we have some liquidity there that's coming up. So our liquidity is coming from our cash receipts, our sales of our marketable securities, and also, we'll have an infusion that'll happen in around 5.5 months from now. The ability to sell the stocks, again, is, something that we work on every day, and we've gotten better at it over the last 2 years. We couldn't be better at it than now. We made the appropriate cuts on the expense side, cutting out millions of dollars of operating expenses in the business to get us to a point where we're operating the business on a cash flow go forward basis. So that's really the focus of where we are today. I wanted to open this up for some Q&A. We have a bunch of questions that have been asked at sequoiacommunity.com. So if you want to ask a question, if you could go to sequoiacommunity.com and go to the website there, and there's an event there for this particular event, and we'll be happy to answer your questions. But for now, I think we have a couple of people that are on the call as well that we'll start to ask some questions of. I think Jim, you wanna go first?
Yeah. Thanks, Chris. Can you give us some indication about where you are or how close you are to cash flow break even, both from an operational basis as well as break even, assuming some level of stock sales? I mean, it's real hard to have a lot of confidence without some meat on the numbers?
Yeah, so right now we're generating around somewhere between $150,000 and $170,000 a month in cash sales. And to break even on that, on a cash flow basis, we got to sell around $400,000 worth of stock in any given month. So those two things combined are what gets us cash flow, brings in the cash flow for the business and gets us to cash flow break even. Now, we signed up 25 new cash customers this quarter so far. So if we can get to maybe 30 customers by the end of the month that are all cash based, I think that's an additional adding on to that cash number that's coming in every month, just reduces the amount of stock that we need to sell in any given month to make up for that cash flow. But I think you can, gauge somewhere between $300,000 and $500,000 a month in marketable securities being sold out of our portfolio.
And in order to let's just talk about the legacy customers. Are they still are they still allowed to use stock as a currency for staying on the platform, or are they moving to cash purchase also?
So most of the customers are cash purchase on the platform itself. It's the media side of the business that was paid for with stock. But what we've done is we've changed the way that we're charging customers, where we're having customers pay directly for their own data charges, and we're eliminating those data charges from our fee. Because what we found was that when we would go to buy this data for our customers, many of them would not have paid a bill for something from a year ago. And that would inhibit our ability to get that data for that particular person. And then it would ultimately come back to us that we were late on the data. Whereas now we're shifting that responsibility back to the company and just providing our service. So we'll see a reduction in the amount of money we're collecting for that, but we'll also see a reduction in our expenses and an increase in our margins.
And on the media purchases, since that's going to cash collection also, or is that just a diminished or de minimis part of the business now?
No, it is going to go to cash as well. It won't be, these smaller companies are not going to spend as much money as they were spending before with cash positions, but we certainly have many cash paying media clients. It's just that we're not going to take the risk on the stock any longer. We're just going to, we want to look back on this in 2 years from now and have it be an all cash business.
So those clients that signed up from, a year and 2 years ago, they don't have the right to pay you in stock going forward.
Correct.
Or do they?
They do not. They have the right to renew the agreement. We have the right to renew the agreement, but they don't have the right to pay for it in stock again.
And when you say renew the agreement, meaning they can renew yeah, okay.
Yeah, the platform side.
Great. So going forward, you don't have the same situation as you did 2 years ago, where you're getting a lot of revenue in stock. That's completely, I don't want to say you're not going to do that anymore, but it's going to be vastly diminished going
Correct.
forward.
It's only going to be like we have some NASDAQ clients that like to do it, that are big, that we can trade out of the stock in a day. And there's no risk there on those, especially if they have downside protection. It's just so we'll do it on a selective basis for the people that we know that we can make the money back on, and we're not taking not taking a massive risk.
Got it.
While we've had the resets, we have these resets that protect us. to the downside. But even with that, you have to then go get the shares. You have to, enforce your liquidated damages if you have to do that to get the shares. So usually with the smaller companies, and then you have to sell very, very slow. And some of these companies sell, may trade, 10,000 shares a day, 100,000 shares a day. And so you're slow to get out of the stock. You just have to be very patient. So ultimately our goal is, the first of the month comes along and we hit all the credit cards, and it's a, pure cash business.
Got it. And so how has the subscriber churn been since you've made this transition to a mostly cash pay business? Have you kept most of the clients, or have you had significant churn off, or have you just seen the media business decline as the cash option has become their only option?
Correct. Yeah, the media business, we're not signing as many people on the media side, but the platform side hasn't slowed down and the churn hasn't changed at all. In fact, we're going early to a lot of customers and asking them to transition off of us paying for their data to them paying for their data, and that's working as well. So companies are receptive to that.
And how many of your subscribers are currently doing that data plan the way that you want it to be structured? How many more do you have to go?
I don't know the exact number on that, but we can get it for you, Jim. I know at least the 25 that we signed up this quarter are all like that. And I don't know the exact number that we've transitioned over, but we can get you that number.
All right, thanks. And then you talk about using the current stock portfolio to get to that cash flow break even. But if we just ignored that part of it, how many clients do you need or subscribers do you need in order to get to cash flow break even? Just the cash flow from the business, not including any stock sales.
You would need somewhere around, you need close to around 400, all on a cash basis.
And where are you now?
We're close to 200. So we had
Okay.
around probably 175.
Right. Okay. And so the current stock portfolio, well, depends on what the market does, should be adequate to get you there.
Correct. If you do, if you can get, now remember, that's just the Sequire platform revenue. Now there's additional revenue that we get from these customers. We also get, they pay us for SMS messaging. They ask us they pay us if they exceed a certain number of emails and things of the sort.
Understood. Chris, stop me if I'm being overbearing.
Oh, please.
Okay.
Please. I appreciate it.
It sounds like from the slide on your current cash positions that the cash you got from DNA and the crypto that you sold, that's already been deployed. And so the current cash that you have is about $2 million. Am I hearing that correctly?
Correct.
Okay. And are there any significant short-term liabilities that you need to take care of? Is there any lingering, short-term debt payments that you have, or vendor payments, or, anything like that has a call on that 2 million over the next, let's call it 3 months?
Well, we restructured the debt with ATW. So we pushed out, our payments that are due to them. And when we did the DNA transaction, so we reduced the conversion price of their debt, but in exchange for that, we got a reduced amount that we needed to pay them for the next, I think we pushed it out 4 more months. So that was good timing on that. So we only need to pay them 7% of stock sales for the next 4 months or so. And then after that, it jumps back up to 15% of the stock sales. So that's on the debt itself. As far as people that we owe money to, we're going through them as we tried to run the business as lean as possible previously. We owe people money, and we're paying them back as as we go. We made a lot of payments in the last couple of weeks here. So, and we'll continue to do that as we, and that's built into our plan of the selling of the stock.
And so would it be fair to say that you're mostly current or fully current on your obligations?
I'd say that there's quite a few people that we owe money to now that we're still working through. We paid the biggest ones that we have, and the most important things to run in the business, and now we're working through and paying some other obligations that we have.
So it's better to think of that $2 million as having it's not going to stick on the balance sheet. That needs to be used. Yeah,
and well, the cash flow that's coming in is supplementing it. So the additional wires that we're getting in for the marketable security sales are helping supplement the additional payments that that are coming out the door.
Right. And you talked about the Freedom stock that you're going to get in dollar terms, but you're not getting a dollar amount. You're getting a certain number of shares that
Correct.
was worth 4.3 million at the date of the transaction. You don't have price protection on that.
No, we do not. No, I wish we did. That would have been nice.
Yeah. Okay. And in Alan's presentation, he talked about building out the infrastructure of the finance department. Can you or Alan give some sort of indication about what that does, or what's needed relative to the how much that's going to cost?
Do you want to, Alan? You want to go ahead and answer that?
Yeah. So let me just give a general background on that area, and then I'll go in to the cost. So I've been consulting with the company since early February, about 10 hours a week or so. And my observation is really in line with the material weakness in internal controls over financial reporting disclosure that was in the 2021K and the March 31 10Q. So to sum it up, the company has sort of an across the board underlying deficiencies in the finance and accounting department with regards to staff, systems, and processes. And it's just not what you typically see in a public company this size with this profile. You might see an issue in one area, but to see issues in all these areas is just not typical, and it can lead to the type of situation we're in now. So to remediate basically the entire accounting and finance function, it's a big lift, and it's going to come with a price tag. I'm not even sure what that dollar amount is, but we're definitely going to need to add some heads, add some systems. And as I previously stated, it's something that will not be measured in days or weeks, but months or quarters. It took a long time to get to this position, and will take some time to get out of it. And in addition to that, there's the added complexity of the 2 critical audit matters as disclosed in the 2021 audit report, valuing the marketable securities on the books and recognizing revenue when compensation is received from customers in the form of securities. These are challenging areas for any department, any accounting department, and certainly challenging for us here. And they appear to really be the nexus of difficulty for the company in our financial reporting deficiencies. So to sum it up, the cost is really not known at this stage. I'll know more as I dig in. And based on sort of the limited understanding I currently have, I'm unsure, when we will actually get caught up on the filings. But again, it's something that's going to be measured in months or quarters, not days or weeks. But I will certainly update everyone once I get more clarity on it.
And Alan, would you say that increasing the financial infrastructure is a prerequisite to getting the financials filed?
Yes.
So that implies that,
and for it to be sustainable.
yeah, so that implies that the financials aren't going to be current for, as you put it, months and quarters. Am I hearing you correctly?
Yes, you're hearing me correctly.
It doesn't mean, Jim, that we're not close on the ones that were pending, right? It just means that the delay in those is gonna lead to more delays going forward. So it kind of feeds on itself as you get into the audit here.
Right. Let me clarify that. That as Chris said, it doesn't mean that we may not file, our Q2 or our Q3, but we would still be delinquent even with filing those as time goes on. So we're going to make progress, but in order to get to a point where we can be fully caught up and never delinquent again, we have to build the infrastructure, the people, the staff, the systems. It just needs to happen. And it's what you typically see in a public company. It's nothing special, really. We just don't happen to have it here.
Right. And I'm sorry, but I just want to make sure that I'm understanding it correctly. So currently you're delinquent on Q2 and Q3 of 2022, and you're not delinquent on the K.
Not well, but we will be in 2 weeks.
But you will be. Yeah, you will be. So those three filings, you still think can be completed, and I know it's tough to put a time frame on it, but that's something that could be completed in weeks, or and this is what I was trying to get at on, or is that something that won't be completed for months?
One of those filings might be completed in weeks.
Okay.
But all of those filings will not be completed for many months.
Okay. And that infrastructure will be required in order, and both you and Chris have said that infrastructure is required in order to get current on the future file, or to get current on the future filings when those future filings are due.
Correct.
All right, great. And just one last thing on this, on the DNA escrow portion of the transaction, that purchase is entirely at DNA's option, right? So that's when the stock was higher, it looked like a pretty good chance that you were going to get that $2 million, but with the delisting and the stock decline, that now looks to be unlikely. Or is there some sort of option or put option?
It's fully up to them, and I would imagine that it most likely does not get exercised.
Yeah, got it.
Even if the stock price was back up above the appropriate level, the risk, who knows? I was certain it was going to happen before, but now not certain.
Right, understood. And so getting off the expert market is somewhat opaque to you right now also, is that correct?
Yeah, because you have to get current on all these filings. You have to be current within 6 months. So if we get the audit done and, before you have, that audit has to be within a 6-month period of when your next filing is due. So you can't be delinquent more than 6 months on any given thing. And then you can get back on.
Understood. Okay. Yeah, I think that's it for me. Thanks, Chris, for allowing me to go on. I appreciate. I hope I didn't prevent anybody else from asking questions. But that's it for me. Thank you.
Thank you, Jim. I appreciate it. We have a couple more people on the line. Louis, did you want to ask a question at all this afternoon?
I'm set for now, Chris. Thank you.
Okay, thank you. I know that Todd, you're there as well. Did you want to ask a question?
Is there any room to maneuver from the expert market to a different side of the OTC? I mean, are we just stuck there? And I just assume, I know we're going to hear in the coming days, where we can trade the stock, but myself and a number of shareholders are obviously all locked up, can't do either. So is there any room within the NASDAQ OTC to move to a different division within OTC?
Not
That done.
until we get current on the filings. So once we're, like I said, once we're current within 6 months of the filing, we'll automatically have we'll move to the pinks automatically out of the expert market. And then you'll be able to everybody will be able to trade it. But we have to get current within that 6-month period.
Yeah. And has Markham chimed in on anything as far as any clarity on timing as well? Or are they kind of in line with what you guys are thinking, that they're just kind of overwhelmed and trying to deal with marketable securities and such? Is that kind of where the holdup is?
Yeah, it's very difficult to give any time frame there. You know, we don't really get any guidance around the time frame. So
Yeah.
I'd rather not comment on that at all.
And then if I look at, and just correct me if I'm wrong, but if I'm looking on the website and I see marketable securities with the discount ratchets, you know, somewhere between 26 and 28 million in an asset, and we could discount that further, I guess, because it takes time to sell those. But then also you've got the 2 million in cash, then you've got 4 million plus of no price protection of restricted stock of FHRC or whatnot. And that seems like a much higher valuation than what we currently trade at, obviously, on the expert market. Like a steep discount. That's not including the fact you have an operating business that is generating cash flow. Is that a correct assessment?
Well, I mean, yeah, that you know, unfortunately, you know, when you make a big move like this, there's an initial shock to everybody in the market that is very scary. And a lot of people sell shares, and in our case, they certainly did. We had a few people that sold a significant amount of stock in those first couple of days. So now we need to, start to figure out where, who are the market makers that are making a market here and people can buy the stock for. Because I've received more calls from people saying that they want to figure out how to buy more stock than I've received any other kind of call. No, it's not. And so I think that if we can solve that problem and figure out the answer to that, everybody will really like that.
And there's also some intention for SRAX to buy some of its own shares back as well with some of the cash, or just you're going to stay pat with the 2 million you got?
Well, we're obligated to buy back if we can figure out how to do it, like per the agreement that we have with ATW. For the release, we had to use some of that money to buy back, but we don't know where to do that quite yet. So we're trying to figure that out.
Okay. But that would put pressure on the stock to the upward side, I would hope, as well as the other people that have given you a call. Yeah.
I would imagine.
Okay. Okay. That's all I had. Thank you.
Thank you, Todd. So we have some other questions that are coming in on both the Sequire platform, and somebody's asking, is there any warrants out there, including DNA, LD Micro, and if so, what's the average price? There's no more warrants left. All warrants are now gone. They've all either been exercised or have expired. So currently the company has no warrants that are outstanding. So the next one is, do you mark to market the securities portfolio? If so, how often? Yes, we market to market every quarter. At the end of each quarter, we market to market. And also we're doing studies on the portfolio throughout the quarter to determine what revenue is. Because remember, if you've been on the calls before, if we do a contract for $100,000 in stock, the revenue is not $100,000. The revenue could be anywhere between 40 and 50,000 for that entire position. So we do the analysis of what the value of it is when we sign the agreement, and then we do the value of it at the end of each quarter. So what percentage of the portfolio is available for sale today? So if you go to SRAX.com/stock-portfolio, you'll see an up to the minute of what's unrestricted what's restricted, and what the reset shares are. And that'll give you a total view of the total shares that we have out there at any given moment. But even though shares are unrestricted, they still have to go through the process of getting deposited. And so, typically in the account, there might be anywhere from $1 million to $2 million in unrestricted shares at any given time that we're selling in one of many of accounts. So we have, around 4 different accounts that we sell out of with the portfolios. Then the next one is, what's taking the audit firm so long? Is there an argument with the audit firm that is delaying the filing? No, to date, we haven't had any arguments with them at all. They wanted to be diligent and, do their work, but we haven't had any disagreements on anything. So hopefully we can, just get through and push things through and finish it up. Now, there's some more questions in the Sequire community as well. So I'll go ahead and cover those. If you haven't asked a question and you want to ask a question, because a lot of times people comment that we only received questions from certain people and didn't let certain people talk, but everybody can ask a question inside of the Sequire community platform. So if anybody has a question, just go to sequirecommunity.com and we'll be sure to answer that. So we have a question from Dan that is talking about, he's saying he wants to buy some additional shares at this price. Where can he do that? I think, Dan, we've answered that question. We're looking for that now. We're trying to find out which market makers will allow that to happen. The next question is from David. He's saying, how long do you think it'll take to regain compliance? Weeks or months? I think Alan answered that question already, that we think it'll be in the months to get to compliance. Okay, and here's all the questions that I just answered. Should we expect continued digital marketing revenue to promote our subscriber public companies? Yes, we'll have that, but it won't be coming from stock-based compensation. So companies will pay us in cash for that instead of stock. So I'd imagine that number to decline a little bit, but because we're not taking stock for it, but we will continue to have revenue there. And then also, Anthony asked, despite making client companies pay for the big data, can SRAX still generate high margin revenue? Yes, the highest margin revenue that we have comes from our platform. The platform itself runs at around a 95% margin. So it has substantial margins in it. So the more clients that we have on the platform, the better it is for us. So let me now jump over to, there's a couple more questions here. Again, there's a couple of questions, more questions, but they're the same. One from Dan and David, where can I buy more stock? We covered that already. And how long will it take? So the board will be open on Sequire community for a while longer. So if you guys want to ask any questions, please log in there now, sequirecommunity.com, ask any questions you like. We'll post the answers here on the site and get back to you. So again, anybody that wants to ask a question, please ask it, within Sequire community. It's impossible to go through the hundreds of people that are on the call to know who might have a question at any given moment. So with that said, thanks a lot for your support. I really appreciate, the number of people that called after this happened. I wanted to do nothing but crawl in a hole, and but I really appreciate the number of you that have called and expressed support for the company. So thank you very much. That's, meant a lot. So I really, really appreciate it. And if you have any questions, please, you can reach out to me directly or ask questions on the Sequire community site. Thank you very much, everybody. I appreciate your participation.